So, welcome and thank you for joining us for our, I think, 16th Build for Her forum. This is our monthly effort to bring together founders who are solving or going after a hard challenge of building for women. This is a forum where founders come and talk about experiments that they've done, what worked, what didn't work, and what lessons they'd like to share with others in the community for them to avoid inventing a wheel, maybe helping build momentum to serving women and a large number of women meaningfully. We're just so glad to have Hardika join us today. Hardika really needs no introduction with Kinara. She's really created the edges of what does it mean to serve women meaningfully. Um, how we'll plan this out is maybe, Hardika, if you have some points to share for about 25 minutes or so, 25, 30 minutes or so, and then we'll want to keep the floor open for questions in the last 15 minutes or so, if that's okay. Yeah,
Oh,
over
yeah,
to you.
happy to do that. I will speak for maybe less than 25 minutes so that we have more of an interactive conversation. I feel like that will be best serving the purpose of this forum. Um, but thank you very much again for having me. And I know this is about how we are solving for women. But let me just tell a little bit about what is Kinara Capital and how I got started as a woman entrepreneur and solopreneur trying to take this on. It's a 15-year journey at this point and many more years to go in some sense. But really, it started very simply. I was working in the social enterprise space more as a mentor and advisor, and it just felt that I was missing being on the front lines and trying to do something of my own to really create impact. And that is what, last mile inclusion, last mile financial inclusion came into the forum of my conversation of what would be relevant for what I could do. And I packed my life and moved to Bangalore, nearly 15 years ago at this point, and started Kinara back in 2011. We are a MSME lender. So we provide unsecured business loans to micro enterprises, mostly micro, 99.9% micro, maybe one or two small enterprises have squeezed in as they have grown and in their journey with us. But as we all know, that gap is very, very large in India, and the impact of that gap on our economy is phenomenal. So it's felt like a big problem to solve, and that's what the origin of Kinara has been. And my original idea, and since it's all about sharing learnings and sharing, what we did along the way and how things changed as well. The original idea, to be honest, was that I spent 20 years overseas, worked in a variety of different countries, and as a DEI, something we talk about today, it wasn't really a term or a word that was used. Definitely felt that in the workplace there was a gap, that there was a difference in how people interacted. And so my thesis while I was doing inclusion on the front lines and saying, let's bring in micro enterprises into the foray of formal credit, let's give them the capital they need to grow their business. And just to give you some contextual numbers, in the last decade or in the last 15 years since Kinara Capital has been around, we have disbursed over $1 billion in, over 8,000 odd crores in terms of capital out the door, over 1.5 lakh loans across entrepreneurs. The original idea in terms of women and women empowerment was more from within. How do I bring more women into the company? How do I create that space and open up that space for women in leadership? And how do I create an environment where they feel that they have a seat at the table, the right to speak, the right to demand all of the things that we should all have the right to do. And that's how it started. I started hiring more women. I was conscious about my hiring. I was conscious about bringing women into the C-suite, into our head of departments. And even today, you can see about 50% of our management team is women. And in the head office, that number is, even more than 50% of our head office is women. It's harder to do that in the field because we are a last mile distribution branch network model. It is much harder to do than the field, but we have still managed to have, over the years, bring people in different functions, even in the field, including not just sales or credit, but also collections. But again, it started as internally as a mandate or as a view of how we can bring women into the workforce with an opportunity to grow and scale and give them that platform that may not be easily available elsewhere. And I've been really lucky to have such strong women that have joined me in this journey over the last decade and claimed and made it their own as well. So along the way, we started then looking at the problem of why that entrepreneurship piece and the last mile is difficult, right? Why is it that while we have 70 million MSMEs, that only 10% are women entrepreneurs or women MSMEs, and even within that, more and more are informal, more are home-based businesses. What was it that were the impediments for their growth? And so back in 2018, so it's been about seven odd years, 18-ish, we started the Hervikas program. And what Hervikas was is really just to say, how do we build an enabling environment around women entrepreneurs? What does it mean? What does it take? What are the problems? How do we solve those problems? And how do we, basically provide a platform for women entrepreneurs to have better scale? So what we did was, essentially, first things when we went out and spoke to women, the biggest issue is access to capital. And we see this even today. People will say that they're unable to get access to capital and they go to a bank for a business loan. There'll be all these promotions about women businesses getting special programs by multiple banks, etc. But then, they get stuck because they don't have formality of business. They don't necessarily have ITRs. They don't have a co-applicant that is their spouse. They don't have, there will be all of these reasons that prevented them from getting the access to capital, even though they are a business that, in true form are just another micro MSME business, right? So, from that lead, what we took away was, how do we build something that essentially breaks this bias, right? And we saw that even in our field teams, most of the loan officers are men. And how do I get or enable my field teams to go approach a women entrepreneur? And so, to solve this problem, we came about it in a little circuitous way. We basically said to our field officers two things. One is that we will give a discount to the product so that it's easier to sell, right? If I have to go and if I'm able to come to you and say, listen, who's running this business, who is involved in this business, and I can offer you a discount. Would you be interested in a loan? Maybe there is some momentum on that side. So the field officer is now encouraged to go and ask those questions and try to see if he can make the sale. And he gets a commission, or incentive, not a commission, an incentive for making that sale, right? So he is now motivated to make it happen. So that's the first bit. How do I make sure that my field teams approach a woman entrepreneur and doing this in a way that, makes the sale happen for him, so he earns that incentive, gets me to get him in front of a woman entrepreneur. The second thing was more fundamental, is how do I make sure that we are, at the cost of the company, enabling that entrepreneur. And so what we did was we said, we'll do a discounted program. We will do and this has also gone through some variations, and I will share our learnings along the way. So we initially started with just saying, we'll give a processing fee discount. If you're a woman entrepreneur, our processing fee is 2%, you get it at 1%, right? Well, that's something. It helps. And it did. And we started the program that way. But what we realized is that what really helps is if we can get that woman that discount through the term of the loan. So we increased it to say that instead of just a discount on the processing fee, if I can offer you a discount on the interest rate itself, then your EMI is proportionally lesser than the same exact loan amount, decision for a different business that happens to be run by a male entrepreneur. And that was a real sort of sticky point that we got right. But it took one or two turns to get there. And that really helps, right? And so both from a selling perspective, it helped. Now, the second part is, okay, I can approach the entrepreneur. How do I remove the bias in my decisioning of the loan, right? And so our decisioning is entirely automated, AI, ML. We've built models based on our own data. We've been running these models now for 5-6 years. These models don't distinguish between male or female. They distinguish based on the variety of input variables and calculated variables. That could be credit bureau history, could be your banking, could be the revenue of the business that we've calculated. It's all of these more quantifiable parameters. It's the sector you're in, it's the geography you're in, but it doesn't necessarily distinguish between male or female when it makes the decision of lending. And then the discount is a system application that happens automatically after that decision is made. So we solve for two parts: is taking the bias out from the decisioning piece, but making sure that the discount is not a special category thing. It just applies. It just happens, through the system, and it just goes through, right? So these things really just changes. I mean, I know they sound like small tweaks, but they are meaningful small tweaks, so much so that we have at this point dispersed over 1,000 crores across 11,000, different business loans to women entrepreneurs, right? And the number of Hervikas program participants, if I may call them that, is nearly 10,000 participants, 10,000 women entrepreneurs who have gotten these loans across 100 cities, right? So this is the ability to do these small tweaks and push that out there to promote is tremendously important as a design thinking point of view. And it's something that we've been able to do. Now, how does that matter, or why does that matter? I'll tell you, women, when they get that access to capital, which is harder to get, they value it more. So in terms of what they do with it, they hire more women, and they have to go out and hire people for their businesses to move their business forward. So they hire more women. They are able to in our own data, if I look at the number of jobs that we have created, 40,000+ jobs have been created by these women entrepreneurs, right? And 17% of them are new jobs to new people. A third of these jobs went to other women, right? And so that's the important bit, it's a ripple effect of, one turn here, one tweak here, that now has created, funding for 11,000 women, 10,000 women, 11 multiple loans, 10,000 women, and then it's created jobs for 40,000 people, of which a third of that have gone to women. And that's the beauty and the power of, intention turning into action. One other thing that, and so the next question I will say is, okay, where do we go from here? What's next, right? And what we then have discovered in our own, again, our customers tend to be our biggest teachers, right? Is going out and speaking to them and saying, what else is, where is the problem set, right? So first is, okay, how do I get capital in the hands of the people that need them? And the women entrepreneurs need the capital just as much. So let me get that. The second is, how do I build a universe around them? So we run a Grow with Kinara series. Some parts of this series are actually specially catered for women entrepreneurs. We have done in-person, local language meetups of our women entrepreneurs, where our management team shows up, so they are equally comfortable. Our head of credit, our head of risk, our CFO, myself, depending on where we are, that brings that element where they come into an environment. We talk about business planning, ideas, what they're dreaming of, and the ability for them to have a point where they can feel comfortable and a group of other women to share their business, aspirations, right? And that's been a real connect point beyond just the capital. And through those conversations, what we heard was that women started talking about, I mean, it was so hard for me to start. And it would have been so great had I known, or if Kinara could have a program that would let me start something. And so we have now created what we call Hervikas 2.0, which is an further extension, right? And the idea is, and look, the problem is very simple, right? If you have, it's the same problem we have, whether it's in universities or whether it's in engineering colleges or, and across the board, right? You got to keep going back to the root of the problem as far back as one can, to start solving different parts of it. So we solved the access to capital part of it. Let me rephrase that. We've attempted a solution for access to capital for the entrepreneurs that we can reach. But now, how do we go back to reach the entrepreneurs who need to start out, right? And what we created with Hervikas 2.0 is exactly that. It's a program for women who may have a home-based business, who want to branch out into a more commercial venture. And doing that, what they need is startup capital. And I'm not talking about startup capital like in the tech sense of the word. I'm talking about small, 5-10 lakhs of startup capital, simply to, rent a place, buy machinery, buy stock, just to get out of that home business mode into a more formalized setup. And what we have done for that in the Hervikas 2.0 program is in essence to give that startup capital with a set of features like a moratorium. You don't have to pay anything for a grace period for payment. Support services, right? Making sure that you are Udyam registered, or do you really need GST, or how do you, have you thought of Google My Business, and all these additional pieces to help you as an entrepreneur move into a more formalized setup. So that's Hervikas 2.0. And of course, the discounted loan product will apply on top, but it gives them breathing room. They come with the talent, with some sweat equity, maybe some capital they've already invested. We provide some additional capital, give them some breathing room, some time to build that business out, 6 months, 8 months, 12 months, based on what their needs are. And then from there, they can take off to the next level. So this is our evolution from our learnings of what we have seen in terms of women entrepreneurs and their needs in terms of small businesses. I mean, the stories are just amazing, right? And if you haven't been on any of our social media handles, you should go and see and listen to the stories directly from these entrepreneurs of how powerful it has been for them to get this capital, the hiring they've done, the aspirations they have, and just their ability to intercept that at a point in time that is, that is most crucial for them. So we all know that MSMEs have great potential for what we need to build from an economic journey for the country perspective. And if we don't include the women MSMEs in that journey, I think we will do all of us a disservice and a nation a disservice for not, getting that right. And that's my personal view on we have to be inclusive, both inside the organization, as we have tried to be, but also with our customers, and continue to evolve our products and our solutions so that as the customer needs evolve as well, that we are there to be as supportive of their journeys as we can be. I'll take a bit of a pause here, Supriya. I've been going on for some time.
This is very, very insightful. Folks, we can open the floor for questions. And while we start seeing people ask questions, I'm going to slip in two of my own. I hope my voice is getting through clearly.
I can hear you mostly, but yeah, carry on.
My first question is, why take a programmatic approach to serving women? I mean, what is it that you were able to accomplish? And maybe in hindsight, with calling it Hervikas as against not calling it a program per se. And two, what you do around community building, conversations amongst them, does that add to your acquisition cost? And the reason I'm asking the CAC question is a lot of times we've heard financial service providers talk about how CACs to serve women customers are at least a few times higher than male customers, and that comes across as a big deterrent, according to them, in them meaningfully being able to serve women. So those two questions.
Yeah, I mean, look, the programmatic approach, the answer to that in my mind is actually fairly straightforward. If we don't, if we don't label it, simplify it, put a bow around it, we cannot institutionalize it. When we have an organization of hundreds of thousands of people working in the front lines, working across the different geographies and teams, you need to basically call it, claim it, and enable it, right? And so institutionalization is tremendously important, and creating a program allows everybody to know what their role or part is, and therefore, how do we link that to the company objectives, to our mission, to them, and how they can align, how they can find their own purpose or connection to it, right? So that's the reason for the programmatic approach. In terms of cost, does it make it more? I would like to say that this is a long game. If we take a short-term view of it, yes, probably that is absolutely true. But in the long run, if you look at the impact of women in terms of both their growth, in terms of their communities, in terms of the referrals we get because of it, in terms of the repayments we get, and I will tell you, I know we don't want to talk about COVID ever again, but please bear with me with this example. We had one customer who did not take moratorium, who was a woman entrepreneur, did not take moratorium. And, when we went back and said, look, your business is actually, not operating. Are you sure you don't want this moratorium? It's available. And she said, no, I figured out how to sell on WhatsApp. I'm going to make my payments because I don't want to pay additional interest. There is something beautiful about how much understanding of finance there is there at the ground level, and how, as a small business entrepreneur, she basically said, no, I will figure this out. I have got other ideas to do it. Now, we can talk about CAC, but then we have this scenario as well, which is, to me, like I said, this is for us collectively is the long game, that it allows us to do something very impactful. And I think the ripple effect of that will come in different ways in places that we might not even imagine.
Super. Folks, questions? Nisha, yours.
Yeah. Hi, Hardika. Good to meet you. Thank you so much for your talk. I'm from Dwara Research.
You've done some work with Dwara Research on this.
Yes. Thank you so much. So Hardika, my question is to do with the theme of affordability of credit for nano enterprises and women entrepreneurs in general. And the question is about, how can we leverage Udyam Aadhar and the account aggregator framework to enable more affordable credit for women entrepreneurs? What we are understanding from the field is that a lot of them are also previously JLG customers who have now the potential or capacity to transition to individual loans, and that they can actually take up those loans and have built a good credit history. However, we're also coming to understand is that much of their transactions and businesses remain cash based, and they're still in terms of paperwork or PAN and GST, they're still not very great in terms of their eligibility markers. At the same time, on the account aggregator framework side, if we look at the data there, we see that most of the account aggregator consent are for, the salaried elite personal loan kind of a use case. So what is your view on how we can, enable this trinity of Udyam, Aadhar, account aggregator, and UPI to enable cash flow based lending for these underserved segments at affordable rates?
Yeah, no, it's a very valid point, right? And we are integrated with account aggregator. I think we have several different levels of complexity with that. One is who is banking, which is the question you're asking, right? Is this nano entrepreneur really banking? And I think the UPI interception is really helping that now. So today, we would take business banking initially, but we realized that a lot of the transactions are happening on personal banking, even though they're business transactions. So today we intercept even the personal banking. So that's one way to overlay UPI and account aggregator. Now, account aggregator, again, it's consent-based. People are still new to it. There's not all the data available. So it is about time, and we need to give all of ourselves a little more time to get there. But in essence, this is, this piece of formality of business or formality of transaction is happening far faster than we think it is, right? And UPI to me, is just the unexpected marker of what was cash, and especially small business cash is converted into UPI. So we will see more and more cash flow based lending, UPI based lending even, right? Just based on UPI, can I assess the rest of your business and can I give you a loan that is relevant to your need? I do think that will happen naturally, but time is what is required because data needs to build up, and therefore models can be built on once the data is built up.
One follow-up question here, Hardika. Not to put you on spot, but what kind of research do you think in this space might be relevant from your perspective, just as a takeaway for me as a researcher?
Yeah, I mean, I would say that, look, there is the spectrum is very large. You spoke specifically about nano entrepreneurs, which is how you defined it as JLG plus. Then there is MSME, which even within that, the spectrum is very large. Like the MSME Act itself says anybody up to 5 crores, of turnover is micro. But most of the customers that we work with have, 1.5 crores of turnover, right? And women tend to be even on the lower side of that. So I would, from a research perspective, I would love to hear more about the needs of women in these different brackets and how are these needs changing between your absolutely JLG plus to nano to your 1 to 5 lakh customer to your 5 to 15 lakh customer. What's different, what's changing, and what is their, not just their capital needs or credit needs, but their business need, right? What do they need for growing their business, expanding their business, scaling their business? Because that is definitely different in these sub-segments. So if there's research around this, or if you can take that on, that would go a long way for folks like us to curate a better product.
Thank you so much. That's a great input. And if I can just respond to you very quickly on that. So recently, the Ministry of Statistics and Program Implementation, MOSPI, has actually released a really large nationally representative data set. It's called the Annual Survey of Unincorporated Enterprise Survey. And it's a treasure trove because they have surveyed 5 lakh enterprises, and these are all unincorporated, unregistered. And 99.8% of these 5 lakh enterprises are in fact micro, which is to your point that, but unfortunately there is scope for more granularity in terms of that segmentation. So I think that data point is a good starting point, and I'll take your input and we hope to do something about it. Thank you.
Super. Thank you, Misha.
Hi, Shilpa. Go ahead.
Hi, Supriya. Hi, Hardika.
Shilpa.
Nice to see you. Yeah, always a pleasure to hear from
Always.
you.
You're down the street.
Yeah, exactly. So, follow up. I think it's a perfect segue from where Misha ended, right? So I'm also wearing the RBIH and the ULI hat a little bit since that was my last experience. So from a ULI perspective, thinking through a DPI lens, Hardika, what other, I mean, and ULI is doing a great job of unlocking, data sources which lenders previously never had access to, right? I mean, they're now 55 sources plus and counting. If you were to recommend 2 or 3 such women-centric databases, right, which could be unlocked through ULI, which could potentially make women, something other than thin file customers, what would they be?
Oh, that's a tricky question. Somebody should get Shilpa off this panel. conversation. She's asking me tough questions. But I'll tell you what I like about ULI as a concept. And, I think this is the future also.
I'm not an RBIH anymore, just to let you know, so you can be as frank as you need to.
No. See, the truth of the matter, which is the problem we're all trying to solve, is how do I assess this customer, right? Which is what Misha was saying. They're nano, they're cash. How do I make it work? We all know they have a need. We all know they need capital, but how do I know how much capital? And the whole idea here is alternate sources of data, right? Which is, as a concept, is the right idea. And those alternate sources of data, I mean, UPI has been a big stand-in for the cash part of the alternate source of data. What else, right? And so we are seeing, we started a partnerships program where we work, in an embedded finance model, right? And so let's just take a very simple example, and this is not women related, but we can then take one step beyond that, which is the question you have, and I don't have a straight line answer just yet. But let's just take an example of Zomato, let's say, or or any delivery service for that matter. There is so much information. If I'm a small business, I'm that lady who serves these fabulous idlis on the side of the road, or and I have Zomato or Swiggy picking up because I have demand. That's alternate data. I can understand based on what is the price, your gross ticket on that, and how many idlis you sell, what is on average you sell for 50 rupees, send out 50 parcels in the first 6 hours of their day. And I can then I can assess that into a daily income, monthly income, and therefore what kind of input cost you need, raw material cost to run, or whatever you need to run your business, right? That's alternate source of data. So I'm not necessarily saying it's about women, but here's an example where it could also apply to women. How can we aggregate private sources of information in an perhaps anonymous, in an anonymized way, or through blockchain? I'm almost scared to say these words, but that's the way to protect both sides, right? Because data is proprietary, and if I can find a way to blockchain it so that I get access to that information that's proprietary to an organization, and then be able to parse that and make a lending decision. I may never need account aggregator. I may never ever need a bank statement ever again, but I can get the capital to the person at the point of their need, and then the right amount. I didn't answer your question directly, Shilpa, but I think I can extend that concept.
No, absolutely. And I think, this is very much on the list of priorities of the RBIH team, but you know how difficult it is to bring private players onto a public platform when data is their currency, right?
Yeah.
I'm hoping that, that will happen someday, and we will see it on ULI someday. And not
Yeah.
just Zomato, all gig platforms, right? They're a treasure trove of information.
Yeah.
Even if one like Uber or Namayatri were to come on, were to share their data, it would be a game changer for lenders. So.
Yeah,
for sure.
But maybe we can do it through blockchain, and there's a fee structure around it. So it's, it becomes a little bit more palatable for all, and it's
exactly. Yeah. Absolutely. Thank you.
I'm wondering if it's not, at least you're seeing frictions there because there's no clarity on what is in it for me, or what is the business model of me sharing my data. Maybe.
Yeah, but you're right in one sense. But in another way, I would say that a simple way is, if you're monetizing the data you already have, and you're using it for your business operation, but you're getting some uplift for it. That's one point. The other point is, just imagine if I know that if I sell through, and again, we'll use Zomato as an example because it's a simple one, or delivery or whatever, and they can then get me access to credit, that I'm more likely to join their platform, right? Assuming we have choice of multiple platforms for different things. Then that also becomes a customer acquisition, or at least a customer tug for a new business or a new company as well.
Yeah, I think leave lending to the lenders and the service to the aggregators, right? They're two different entities with two different skill sets. So it only makes sense that there's a marriage between the two. Yeah.
All right. Thanks, Shilpa. Any other questions for Hardika? Oh, there's one I see in the chat.
Okay.
Lily, I hope I'm pronouncing your name right. Do you want to ask a question? Um, okay. So the question, and I don't know, Hardika, if you can see the chat box, but I think they're asking,
Yeah.
did you? Okay.
Did you observe? Okay, the question, yeah, I'm looking at it now. Women entrepreneurs bringing in more women to their teams while they expand, which is great to hear. Did you observe any age-specific disaggregation in this trend, both in entrepreneurs or the ones they recruit? Look, I think at the end of the day, let's be honest with each other that we all need to be good at our jobs. And so, age is not what, one way or the other, right? It should not matter, does not matter. I would say that question could even be applied to, perhaps in any work situation, right? I will tell you that when we are hiring, we're looking for the right fit. And let's assume that all experience, and of course none of this is a perfect science, but all experiences and inputs are equal, then can we lean and make sure that we bring the women employee into the fold, and let's create an enabling environment for them, whatever their scenario is, whether it's flexibility for elder care or child care or what have you, then that's an organization's responsibility to do. The rest of it, age or otherwise, should just be part of any recruiting process as a unbiased process point.
Got it. Lali, I hope that answered. I mean, it was pretty insightful for me. Any other questions, folks?
Yeah, Supriya, I have a question. So, hi Hardika, thanks so much for the insights. Very interesting to hear from you. My question sort of leads from what Supriya also mentioned about customer acquisition cost. So I was just wondering, how do you manage the customer acquisition cost when it comes to women entrepreneurs? Because I'm guessing that because you're going the extra mile and with the interest subventions and all those kind of things, there is an additional expense. There is a differential in the acquisition cost on some level. So do you make up for that with better repayment rates? Because as we know, women are like the literature says that women are better borrowers, etc. So how do you make up for that? So that is, I don't know if I phrased it properly, but yeah.
Yeah, I get it, right? Like, at the end of the day, it's a business decision so look, customer acquisition cost, to me, it's not that different, right? We have a field team that goes out and meets potential leads, prospects, right? What we are doing is enabling them to be free and enticing them to go meet a woman entrepreneur if they see that there is a woman entrepreneur that could fit the customer profile that we would fund and may have a need. So we're just giving a little nudge by doing that, and then the cost of that acquisition remains the same, because once they come into the process, the rest of the process is identical, right? In terms of how the decisioning is done, the discounting, etc., happens systematically, so it's not changing that much. I would say it really comes down to the ethos of the organization, right? And I'm not sure we've ever parsed this down to, disbursement per male entrepreneur is X and female entrepreneur is Y. To be honest, we never really seen that as a hard number, and neither do we want to, because really this is about the ethos and the commitment of the organization. We are we are talking about impact, and impact comes in different ways. And this is very close to what we want to do. And therefore, it's just built into the solution. And so we don't think of it as just a metric in isolation.
Yeah, thanks. I was also wondering about lead generation, in a sense that I think the community-led efforts that Kinara is carrying out and the meetups that you mentioned. So I'm sure that there is a lot of lead generation which happens from there as well. So maybe you could
Yeah.
share something on that.
Yeah, we do that, and we do that across the board. Every month we run a Grow with Kinara series, right? So that's and we run it in local languages, and we do it online, digitally, and we also do it, physically. Not as many sessions as we do digitally, but we do it physically as well. And that's an open session for all of our entrepreneurs in a region. But then, once or twice a year, we run special sessions for women entrepreneurs separately, right? So yes, you're absolutely right. It serves as a great way to connect. It's a great way to understand what their needs are, what the impact is, what else we could do. And invariably, it also ends up being a lead gen opportunity also.
And as we are nearing the end of the clock, some number of time available, we've got 2 more questions from the chat box.
Okay. Any suggestions on how to approach banks, etc., when approaching them for partnerships, especially when pitching women-focused solutions? Are there specific roles that can be targeted? Are folks typically indifferent or gender agnostic? I wish I could say that people were gender agnostic. I don't think that that's accurate in many ways. If we were, that wouldn't be just 3% of female founders in the world ever getting capital. So that is a problem. That is a much larger problem to solve. So I mean, when you're approaching them for partnerships, the way I would suggest pitching the solution is talking about PSL credit, right? So banks are always looking for priority sector credit, and women entrepreneurs or women under a certain segment, or of a certain segment qualify for priority sector credit. Within that, there are aspirational districts that RBI has, that the government has, that gives a bank additional uplift to that priority sector credit. So then that is a good way, a good inroad if your women focused solution can meet that, to open that door to have that conversation and to kind of mobilize some of it. That would be one suggestion I have. What is the other questions? How do you underwrite credit for startup capital, assuming that those who need startup capital are first-time borrowers or first-time business people? Yeah, I mean, look, most of our customers are first-generation entrepreneurs. The only difference is they're a little further in their journey than the ones who need the startup capital. The biggest the gating factor that we're looking for in the startup capital for women entrepreneurs under Hervikas 2.0 is, do they already have something up and running, right? So it's not a paper idea. They've done a home-based business, they have orders, they have serviced, fulfilled, and now they're talking about formalization or scaling at the next level, or they need more commercial level machinery to set up that operation. It's somebody who is already so to say, in business, but now is taking the step to become a formalized business in a more structured manner. And that's some of the things we look for when we're looking at that as startup capital.
All right, right on time. That we are closing this. Thank you so much, Hardika. And I think this was just rich with so many things to take back for every one of us who are on this call. Thank you so much for doing this.
Thank you, everybody. And it was a pleasure to be here.